Nifty was full of drama last week, like a typical Bollywood masala drama. Monday, 300-point gap up. Closes really strong. Tuesday, Wednesday, Thursday, holds on to that gain, scales above that psychological 25,000 level. Looking good. Then comes Friday. 200 points down. Testing and teasing that gap up. If you're a short-term trader, you would be wondering, little thoughtful, that how should you position yourself for the week ahead? So I do this every weekend. So join me. Let's take a look at the Nifty. Let's take a look at the sectors. We'll, of course, put the dash of the relative strength analysis that we do. And let's try and figure out that what can we expect from the sectors? What can we expect from the Nifty? And based on that, how should we position ourselves? So come join me. Let's analyze the markets together. All right. So here we go. Usual Nifty daily on my right-hand side and the Nifty weekly on the left-hand side, the Heikin-Ashi, NexxtPro Price Indicator, the state of flow, and of course the NexxtPro RSI Indicators. Nothing fancy, simple. Let's just quickly on the daily time frame change my Heikin-Ashi to daily, to the bar chart, I'm sorry. And this was the gap down, a gap up. This was the extension, consolidation, holding on to the gap up. And this was Friday's 213 points move. A lot has changed thanks to last week's move. So let's break down step by step and try understand what can we expect next week. Step number one, let's take a look at the weekly chart on my left-hand side. We have a solid green bullish Heikin. This is a sign of strength. Turn it into a bar chart, you will see almost a 1% week-on-week positive close. It wasn't a great close at the lowest point of the week, but it was a positive close thanks to the gap up. But nevertheless, after 6 negative weeks, we have at least 2 weeks of a reversal. It has reversed almost more than 50% of the fall, and the short-term trend has reversed. How's the weekly chart? The weekly chart, which was weakening, was angling down the trend, the momentum, has all of a sudden reversed. This is primarily, I think, because of the fact that the weekly chart was retracing the previous rally. So I do not have a very strong, high conviction, bullish or bearish bias from the weekly chart. I'll keep it aside and let it decide what it wants to do. And so I would focus more on the daily chart because whatever happens on the daily chart is eventually going to shape up my weekly. With that intention, I come to the daily. What do I see here? I see a bounce back, a pretty good bounce back. Heikens had improved, my state of flow has improved, my momentum indicator has improved, and it has given me a pullback, a short-term retracement. The only thing which I don't like about this short-term retracement is where it has closed vis-a-vis the entire range of the day. Now, how do I read this? I read this as a slowdown after the bounce. My view is bullish because all my markers are bullish. And I would like to see early next week whether it crosses Friday's high or not. The level Fridays is 25,084. So you can easily remember 25,100. That's my trigger point for fresh upsides. That's number one. Of course, if it goes above last week's high and further up, brilliant, no problem. If it goes up, I should keep an eye on this particular red zone. Why is this red zone important? Because in the past, when I take a look at the past price action, I do see that this particular band has had some importance from a resistance point of view, from a supply point of view. So it's not a bad idea to keep a watch on this. So that will be my short-term resistance to deal with if the market goes above Friday's high and if it goes above the week's high then. So I've got my triggers on the upside. I've got my resistance on the upside. Let's see what happens. Let's talk about the downside. What if Friday's weakness continues further down? For that, I need to go back to the bar chart because the bar chart will show me the gap. Now, if you want me to draw this gap, it's this. I can color it, give it a different color like a green, shaded green, extend it a little bit on my right. And this is the gap that we are dealing with. Upside gap like this can act as a source of support demand. So we'll have to expect that somewhere here the market can find some short-term support and bounce back. I look at it slightly differently. The way I look at it is, this was a meaningful rally, bounce back, upside move. This is the beginning of the correction of that upside move. If the market is in a hurry to scale above 25,000 or even 26,000, this guy should not come down too much. If you're in a hurry to go up, you shouldn't come down that much. You will see this in strong upward trending charts. They don't give a shallow retracement. In a strong bearish market, they do not give a very big meaningful rally. Once the meaningful rally and the correction begins, that means that maybe, the choppiness, noisy market starts. So from that point of view, if the Nifty continues to slip within this gap and maybe closes the gap, that spoils the party a little bit. That spoils the nascent short-term bullish party that we just were about to enjoy the upsides. It'll be like dhat teregi, फिर से फिसल गया, ये फिर से हाथ से निकल गया. So that I think we will get some clarity once we meet next Saturday with next weekend analysis. But till then, I think the level that we can deal with is essentially the beginning of this gap, which is close to that 24,700 kind of a mark, more or less there. So 24,700, if it continues to stretch down, and Friday's high and the weekly high on the upside, with this as the short-term resistance. If momentum kicks in, anything can come out on the upside. With that, what should be our view? Bullish. Cautiously bullish. Let's add cautiously to that. No harm in that, but bullish. My markers are all bullish, so my view is bullish, and I should be looking for primarily long trades. That's the Nifty. What about the broader markets, the mid cap and the small cap? The mid cap is given us a strong bullish Heikin on the weekly chart. Turn it into a bar chart to understand whether it also has matched the Nifty with 2 weekly gains. Yes, it has. And it has not slipped as much as the Nifty. So not bad. Again, from the weekly, I cannot take out a very strong bullish or bearish view, so I'll keep it aside and I'm going to focus on the shorter time frame daily. Markers are all positive. Very cute, small little Heikin-Ashi HGB, which I like to call it. If the mid cap goes above Friday's high, I'm expecting further upside. So view, bullish. Small cap, not a green Heikin on the weekly yet, not a green bullish Heikin without a lower shadow. So still okay, not that great as the mid cap, but the daily time frame literally mirrors the mid cap. So I'm expecting bullishness above Friday's high. On the hindsight, if last week's low is broken, must be somewhere here. If last week's low is broken, then the small cap has a possibility of further downside. So Friday's high and last week's low. Remember these two levels for the CNX small cap. View for all the 3 sectors we discussed, the benchmark Nifty 50, the mid cap and the small cap. Bullish, cautiously bullish, that's all right. But the view is look for long trades. This is not the market where you go for shorts aggressively. With that in mind, we should now take a look at the individual sectors. When we do that, we bring in our RRG graphs. With the Strike Analytics page, I'm going to go to the RRG section. I'm going to reduce the indices to the NSE sectors, which I have, the list of sectors. The benchmark is going to be Nifty 500. The time frame is going to be weekly. And I'm going to take a look at it from, let's say, a quarter's point of view, let's say 12 to 13 bars or counts, 13 counts. Let's fit the whole thing. There you go. And I can see that more or less equal number of sectors within each quadrant. We always start with the leading. Let's sort it in terms of percentage change. Nifty Auto, that's like 8.8% in the last 13 weeks. In the leading quadrant, rising up left to right and going up like that. It's a good looking RRG graph. And we all know, if you follow my work, Last week, we discussed auto. It was a standout clearly because of the weekly relative strength it had shown, and it gave a huge gap up. Maruti played a brilliant role. Bullish chart? Yes. Should I go for long next week? What were you doing last week? What were you doing a week before that? Because if you take a look at the Maruti chart, the one which led the move, it had given couple of opportunities in the last couple of weeks. Now, yes, it's bullish, but from a short-term trader's point of view, it will be a chase. I wouldn't do that. I would like to wait for a slightly more correction or consolidation. And then once the risk reward ratio fits in better, once the risk is relatively lesser, smaller, then only would I like to go for the trades. But view definitely bullish, which means that I'm not going for any kind of a short trade in this pack. That's Nifty Auto. The other one are PSU Bank and small cap. Let's talk about small cap because we just did take a look at the small cap index chart. So beautiful looking RRG graph it was, and now it's losing strength. Apna momentum of relative strength ko wo kho raha hai. It's just coming down. But it's still in the leading quadrant. With that in mind, we can quickly revisit the small cap. And we remember that we had seen a correction. It's not a very good weekly chart, but it's still a bullish daily chart. So if the top, let's say 10, 15 small cap charts, if you track, if you get any bullish signal, long setup from there, you should go for it. That is what our analysis is telling us. Be a little careful, but you can go for it. And then the PSU Bank. The PSU Bank has been showing relative strength. We can see that. It's significantly away from the 0 point, but it has been losing momentum. The entire financials, they were losing for quite some time now. But the PSU Bank is a pocket of strength compared to the private bank and the other non-banking financial stocks. So chaliye, let's take a look at the PSU Bank index. This is the CNX PSU Bank. If you remember, I had kept this red zone for I don't know when. It's been there for ages on my chart. So it's respecting that resistance. Last week, been a solid green Heikin. My state of flow is not positive yet. My momentum is just turning around. And so, okay of a weekly chart, turning around, going back to that crucial breakout level. So I would say 60% bullish, 40% stay away. Come to the daily. Trend is positive. Momentum is also holding well. State of flow, which was holding fine till Thursday, loses a little bit of state of flow because of Friday's big 1.1%, almost 80 points correction. And what it does, it damages the Heikin-Ashi and turns into a red negative Heikin. Want to take a look at the bar chart? This is how it looks. Closes at the lowest point of the day. Look at the size of the range, the high-low. So what does this mean? It's bullish, but I'm not going to act on it on Monday. I'm going to wait for my Heikins to start to improve, at least start to show an upper shadow, go above that upper shadow, and then I'm going to turn bullish. And hopefully in time, we can get that big breakout. So keep an eye on the top 3 to 5 PSU banking names. Now that we're talking about banks, PSU banks, I think what we should do is we should take a look at where lies Bank Nifty, private banks, and finance. That will cover the top pocket of the market. And on the RRG graph, our private bank is in the lagging quadrant, losing relative strength. And our Bank Nifty is in the weakening quadrant, also losing relative strength. And we know this. If you go back to my weekend videos, you'll see that it's been losing strength and it's been angling like this. So it's been weakening. The private banks and Bank Nifty is private bank heavy. So chaliye, let's quickly take a look at the Bank Nifty. Now the Bank Nifty, I would want you to see the bar chart first on the weekly time frame. The degree of underperformance. We've seen some bar charts of the Nifty, small cap, mid cap, auto, and just take a look at where it has closed. At the lowest point of the week, slipped significant and closed 0.35% or 192 points down on a week-on-week basis. And the Bank Nifty is or enjoys the highest weightage. And this is the pain point. This is the point where the market it is struggling and it has to take care of this. All right, view. Momentum, negative. Trend, angling down. Heikin has been negative for 3 weeks, and this is a pullback bar. It's back to those levels from where the short-term bounce back has come. On the daily time frame, you can see that here. And so this is your breakdown point. I think, if you ask me, yes, this is a breakdown point. Yes, if it falls below this, there will be some long stop losses getting hit and the market will expect further downside. But I sense or feel that the degree of noise, choppiness, volatility within this pack, Bank Nifty and private banks, will increase. It's not going to give up that easily. I sense so. I may be wrong. So if you take a look at the Nifty private bank alongside Bank Nifty, you will see the same thing. Of course, you will see the same thing. And if I add CNX Finance to this discussion, then you'll also see similar kind of a behavior. My question to myself is, my weekly chart is negative, almost negative. My weekly chart is clearly showing me signs of underperformance because you've slipped a lot from last week's high. You've closed weak. You're back to from where you started the bounce back, where other sectors are holding on to the bounce back. You are an underperformer. And you are also the highest weightage domain pack in the entire market. What and how should I position myself for next week? 5-letter word, avoid. I'm going to avoid. I know if you are a trader, you would never want to avoid the banks, private banks in the Indian equity market because they enjoy a good weightage. They move the market, right? But kya kare? We have to avoid because we do not have that clarity on the upside, and neither am I willing to trade the breakdown. I'm not a breakdown guy. So I will wait for a little better setup to go short, if at all. So banks, financials, and private banks, we are avoiding. But PSU Bank, because of its relative strength, we're going to keep an eye on that. Not bad. And who else is there in the leading quadrant? No one. Who else is there in the weakening quadrant? We have the Midcap 100, Financial Services, Bank Nifty, and the Realty. Now, Midcap 100 we have discussed, and the RRG graph of Midcap 100 is just cooling off, just like the small cap. But there is a bit of relative strength. You can see its positioning. So we are cautiously bullish on the mid-cap as well as the small cap. Financial services we just discussed. Bank Nifty we just discussed. The fourth one is Nifty Realty. Realty is a beautiful looking RRG graph. It can't get better than that. The flow is beautiful. From improving to leading and then losing some grounds, the momentum loss and now weakening. I think a sectoral chart or an RRG graph who falls like this in terms of the momentum of the RS must have gone through a very steep correction. Still, it has a bit of relative strength in it, not much. Let's take a look at it. This is the CNX Realty. And you can see the extent of the correction is quite too much compared to that bounce back. Let's quickly take a look at the bar chart of CNX Realty. And we have 2 weeks of rally. It did not slip like the Bank Nifty did, but still it's okay. My state of flow is still negative, which is not a good sign from the weekly point of view. My weekly Heikin-Ashi candle is an HHGB, which tells me that last week's low, if it's breached, it can infuse fresh weakness. Now, with that thought, I come to the daily chart. I see improved trend. I see improved momentum. I see an improved state of flow. I turn my Heikin-Ashi chart to the bar chart and see that what was the kind of damage on Friday. It was okay, but not that much. It's still okay, manageable. I turn it back to Heikin-Ashi. I see an HAGB, which is a consolidation bar. I have to keep in mind that I had drawn this particular zone range on the CNX Realty long term back, keeping an eye on these. And it's holding well. So this bounce back has come from valid zone range level. What should I do with this? So what I'm going to do is I'm going to keep a mark or an alert on Friday's high and last week's low. You only look to go bearish below last week's low. But on the other hand, if it starts to scale up above Friday's high, that is where you go bullish. And if I ask myself deep inside, which way do I feel, I sense, I think there's a possibility on the upside. But however, I'm not going to leave it to my sense and feeling. What I'm going to do is next, I'm going to take a look at top 5, 6 real estate or realty stock names, especially those names which, when I add up their weightage, it should be like 80%. Now, let's understand that if the CNX Realty has to give me this move, and let's say goes up 2, 3, 5, 10%, it has to come from those top 5, 6 names, right? Which makes up 80% of the weightage. Agree? So I'm going to do a bottom-up approach here. I'm going to keep an eye on the top stocks. And based on that, I will see whether the sectoral chart, the CNX Realty, is giving me that. All right. So with that in mind, what should be my view? Very selectively, cautiously bullish if I get a move above Friday's high on Monday. If I continue to see that the CNX Realty is slipping and it is inching towards last week's low, I'm gonna, pull myself back. From a third gear, I'm gonna go down to the first gear and then wait and watch. So keenly observe on Monday, Tuesday, and then decide. As of now, cautiously bullish. The other sector which is there in the weakening quadrant is none of them. We have covered it. Let's come to the lagging quadrant. Lagging had private bank. We have spoken about it. It has the metal, energy, and PSC. Of these three, metal is the RRG graph of metal is not worth discussing at all. It was in lagging, picked up, went to the improving, went to the leading, and did all the drama it can, which means it is a choppy candidate. And this positioning in the lagging makes no sense because in 1 week, it can go back to leading. In 1 week, it can come down to weakening. So it's got stability in it. It does not have the stability of relative strength in it. In these kind of cases, it's better you take a look at the sectoral chart and figure it out from there itself. With that in mind, if we take a look at the CNX metal, and you would remember we had drawn this diamond kind of a pattern long time back, and it's been oscillating for some time. Let's take a look at the weekly chart. Going up for 2 weeks, Heikin-Ashi positive, trend indicator positive, momentum indicator just turning up. I don't have a steady state of flow on the upside, but the chart is predominantly bullish. It's not like a 100% bullish chart. It's like an 80% bullish chart. So with that in mind, I'll take a look at the daily trend positive, state of flow positive, momentum positive. Heikin's positive, giving me a pullback. Not bad. I'm on a definitely say it's a bullish chart. My trigger is Friday's high. For all or most of the charts next week, those where you have relative strength, those which are bullish, आपका trigger Friday का high होना चाहिए. Your trigger is Friday's high. A move above Friday's high reinstates the bullishness. If that doesn't happen, wait a little bit. So आपके लिए, for you next week, you should figure out which sectors are going above Friday's high, which stocks are moving above Friday's high, and are they closing above that or not. Those will be your pocket of strength. If those sectors and stocks which are breaking below Friday's low, staying below Friday's low, those will be your pocket of weakness. और अगर जो बीचों बीच है, you wait out. You wait for some direction. But metals, bullish. Next in the lagging quadrant is energy. Now, energy also has been touching few quadrants in a very short span of time. But it's angling down like this. So it's not a very good RRG graph. With that, if we come to the energy chart, do we see a negative trend, momentum? In fact, my state of flow is negative. So my weekly chart is not strong. It's given me a pullback bar. And if it slips below last week's low, it's not good news. That is this breakdown. It's not a very good looking chart. Come to the daily. I don't have any state of flow. My momentum is improving a little bit. My trend is not improving. Sadly, no. This is 80% negative reading, 20% a little bit of improvement because of momentum. Stay away long only, guys. Short traders can look for last week's low. So energy, stay away, or look for shorts below last week's low. Public sector enterprise, also not a very good looking RRG graph. With that, let's take a look at the PSC chart over here. Take a look at the bar chart of the PSC index. It's at the lowest point of the day, of the week. It has not even gone up for 2 weeks. It was improving 2 weeks back. It was trying to improve. But sadly, the PSC negative trend, negative state of flow, negative momentum. It's all weak, 100% weak from the weekly chart. Daily chart, trend indicator negative. I don't have a state of flow, so momentum must be picking up, but negative Heikin back to those lows. This is the first sectoral chart I think we saw wherein the price is almost back to from where the bounce back had started. So clear signs of relative weakness. Stay away. Don't look for long trades. Derivatives traders can look for short. That's back-to-back two sectors which are in the lagging quadrant, and price is also telling us weakness. That's the PSU and energy, which leaves us with the last quadrant, which is the improving quadrant. This is where we have consumer durables, pharma, FMCG, and IT. Let's start with IT because IT enjoys the second most weightage after the banks and financials. It's losing momentum of the relative strength. It does not have any absolute relative strength. It had bounced back big time. Okay, so with that, if we take a look at the IT chart, what do we see? Yes, we do acknowledge the fact that it has fallen quite sharp. That's why it does not have the relative strength. It has given us an HAGB last week. The state of flow is still negative. Trend is negative. Momentum is negative. It's a negative chart, which has just taken a halt. Now, this halt has given us a bounce back. And the bounce back was sharp on, I think, was it Thursday or Wednesday? I think it was Wednesday, yes. The Wednesday's move was pretty impressive. Infosys was playing out, which was a good sign when you see a leader, a guy, a stock which enjoys a maximum weightage, comes from the front and leads the pack. It's always a good thing. So over here, we will have a little bit of confusion, little bit of, carefulness. The weekly chart is clearly negative. The daily chart is clearly positive. Short-term readings are positive. And so I would keep an alert on Friday's high, or should I put it on Thursday's high? If this move happens, then the daily chart will keep on improving and the weekly chart will reverse. Or else, vice versa, it will come down. The weekly low kafi dur hai. I don't have to worry about the low. So till this point is not broken, I'm not too keen on going short. I'm more keen on going long because my short-term chart has improved. Now, time will tell us what will happen. We have to keep an eye on these names. Remember, it's an underperformer of a certain scale. It's not a short-term underperforming sector. So all of a sudden, it will turn on a dime and rally is very unlikely. So it can struggle. It might struggle. So be very selective here if you're looking to go long. It's easy to go short on IT rather than long. Long only, guys, be very selective from a short-term point of view. Derivatives, short trades, you can take them if you start to see that it is slipping. Be careful, both if you're going long or short. So I'm going to defly. I'm going to take the flag off and just observe. The other sectors, consumer durables, is a very good looking RRG graph. It's gaining grounds left to right and all. Does it? And let's take a look at FMCG also. FMCG, consumer durables, let's evaluate them together. FMCG, after staying in the lagging, recently has given a move and has gone to improving, and it's improving. So both the consumer durables and FMCG are giving us signs of improvement. Is the price singing the same tune? Weekly FMCG is range bound. Does not have a strong trend clarity or whatever my RSI is telling me. So weekly, I'm going to ignore it. Weekly is couple of weeks of strength, couple of weeks of weakness. I cannot buy, I cannot trust what the weekly is doing. What the weekly is doing is it's stuck in a range, and that shows on the daily time frame, completely stuck in this range. It's been a volatile range, gone up, 100% retracement, sharp recovery, 100% retracement. And at the current juncture, it is consolidating in a positive state of flow. Now I'm telling myself, I'm not buying what the weekly is doing. I'm going to go with the daily, and the daily markers are all positive. So Friday's high, market, go for long trades. Now remember, any kind of long trades in the FMCG essentially will mean you're going for this breakout. If this breakout plays out for FMCG, it's good news. It's worth a bet. Of course, a traders need to take a bet. Or else it will continue to, chop its way out. It will be oscillating and volatile. But it is giving us an opportunity, a window of opportunity of breakout. So FMCG, I'll say definitely bullish. And then we had the consumer durables also. How's the consumer durables looking like? There you go. Weekly, after a negative Heikin, straight away a positive Heikin. So it's like a yin yang. It's like reversal, role reversal all of a sudden. ये आपको daily chart में दिखेगा. All of a sudden it's a V recovery. Can't trust these kind of charts. Weekly, seriously, can't trust this chart. I don't have any strong markers. I'm open to both sides, 50-50. If I'm 50-50 from the weekly, open to either way, long or short. When I come to the daily, what do I see? My markers are predominantly positive. And like the FMCG, it's on the verge of giving us a breakout. All right. So I need to be a little daring and take the breakout. Or else if the resistance hold, it might come down. So it's a 50-50 kind of a thing from the weekly, bullish from the daily. I'm going to mark it green and look for long trades. But those long trades will land up being breakout trades. If you check the stock which enjoys the second most weightage, if I'm not mistaken, that's the guy which is building up like this for the move. So a lot depends on the first 2 or 3 stocks. How are they going to behave? Please approach FMCG and this sector from a bottom to top approach. Take a look at the top 5-6 names every day to figure out what's going to happen. Right? And the last, I think, sector in this RRG list is that of pharma. Okay. All right. So improving, just like the way the word says, improving sector, improving quadrant. We take a look at the weekly. I don't have a state of flow. I do not have any strong Heikins here. The momentum is negative. Again, the pharma, after that sharp correction, is essentially bouncing back. Micro look at the price behavior is giving me signs of improvement from the daily. And so I will mark it green and I would like to go for long trades from a short-term point of view. The index needs to scale back to this high. Please remember that these all sectors are very skewed towards the top 3, 4, 5 names. So if you take a look at the Sun Pharma, Dr. Reddy, DVs and all those, you'll figure out that from where the strength can come or not. But bullish, bias should be bullish. That's all the names which are there in the RRG graph. It's fairly well, distributed. But I have 4 more names which I have here in the watch list, and that is your capital market. Weekly chart cooling off. Daily came off sharply because of that news, that possibility of the derivatives tenure. But overall, stay away. Why? The trend momentum are positive. The state of flow is gone because of a negative bearish Heiken. I will wait for the upper shadow to come. Till that point, stay away. The other one is defense, another strong rally going through a strong correction. Now this guy is completely range bound and buying some time. Maybe it had made a double bottom, maybe some triple bottom, I don't know. Momentum is improving, trend is not. Larger time frame is weak. So I will also suggest stay away. Go bullish if you get this breakout. See, when the momentum starts to improve, the trend should start to improve almost immediately. Those are good syncs. The momentum has improved, but the trend is not. What are you waiting for? So stay away. I would say because the weekly charts readings are negative, 70% on the negative note. But you never know, if the price reverses and gives that breakout, it can improve. So 70-30. Defense. Digital, sharp recovery, holding well. No problem here. Little stretched. Weekly charts improving. So predominantly bullish. Don't chase, wait for some pullback. And finally, tourism, almost inching back to its all-time high. The recent bounce back has held well, state of flow is positive, everything looks fine, weekly charts are reversing, close to an all-time high. So of course, it's a bullish chart. So as you can see, the Nifty or the overall markets, number 1, has given us a good looking bounce back. Number 2, it could not sustain to last week's range. It almost closed at the lowest point of the range. So there was a little bit of weakness. With that, we will go to next week. Our trigger is very simple. Friday's high for any sector, for any index, for any stock. And we'll be a little careful and cautious if the market does not cross Friday's high within the next 2 to 3 days. Let's say you're on a Monday, Tuesday has passed, you're sitting on a Wednesday, and still the Friday's high is far off, then things will start to turn a little sour. So be careful, be selective, stick to strengths, stick to those stocks which can lead that particular sector. If I'm expecting XYZ sector to break out, do a bottom to top approach and find out which sectors or which stocks, can give the breakout to that individual sector. Okay. I think it's going to be an interesting week forward. It's going to be a week where we need to hunt, we need to work. It's not going to come to us served in a nice silver plate, which I like personally. So let me know what are your thoughts about this analysis. Share your thoughts. It'll be nice to discuss. Till then, take care of yourselves and trade well. Goodbye, everyone.